So how does a country with a huge, growing population just leapfrog traditional banking and build one of the world's most exciting digital finance ecosystems? Today, we're diving into Bangladesh's amazing fintech journey and a really clever experiment they're running to manage a revolution.
To really get this story, you have to start with this number, 175 million. That's the number of mobile subscribers in Bangladesh. Just think about that. A massive, connected population totally primed for a digital jump. And believe me, that's just where it starts.
Now, check this out. 96 million of those people have mobile money wallets. This isn't some niche tech thing for early adopters. No way. This is a mainstream, everyday reality. Digital finance is already woven into the fabric of daily life, and that set the stage for something big.
Okay, so how in the world did this happen? Well, it wasn't an accident, that's for sure. This digital boom was powered by this incredible mix of government vision, new technology, and just sheer necessity. Let's break down the engines that really got this thing going. You know, it wasn't just one thing. It was kind of a perfect storm. From the very top, you had the government pushing its digital Bangladesh vision. And from the ground up, you've got this huge young population that's totally comfortable with tech. Then the regulators stepped in and built rules to connect the two, all driving toward one main goal, getting more people into the financial system. The conditions were absolutely perfect for an explosion.
So with all these pieces falling into place, the potential was just explosive. The whole country was basically on the brink of a fintech revolution. But here's the thing. How do you manage an explosion?
Well, Bangladesh's answer for managing this technological tidal wave was a really innovative idea, a regulatory sandbox.
And this right here, this is the fundamental question that regulators all over the globe are wrestling with. You want to encourage new ideas, you want new companies and cool technologies, but you also have to protect people and make sure the whole financial system doesn't just collapse. It's that classic tug of war between moving fast and being safe.
So what is a regulatory sandbox anyway? Honestly, the best way to think about it is like a flight simulator, but for finance. It's this safe, controlled space where companies can test out new products on a small scale, with regulators watching everything super closely. It lets them test fly a brand new idea without the risk of a real-world crash and burn. And this idea didn't just pop up out of nowhere. Nope, it was built carefully, piece by piece, over a whole decade. It all started with some basic guidelines back in 2011, and then they added more complex rules over time. It all came together in 2019 with the Regulatory Fintech Facilitation Office, or RFFO for short, which became the official home for this new sandbox. And the process for getting into this financial flight simulator is actually really structured. A company brings their idea, the RFFO team reviews it to see its potential and its risks, and if it gets the green light, it moves into a controlled pilot test. It's a super clear path from a spark of an idea to a real-world experiment. So, the million-dollar question. Did this super careful approach actually work? Well, the results kind of speak for themselves. The story of what's happened is, well, it's pretty staggering. And the scale of this success is just huge. Take bKash, for example, one of the pioneers in this whole ecosystem. It's now the world's second-largest mobile financial services provider. That's not just a local one, folks. That's a global achievement that really put Bangladesh on the world's fintech map. But, you know, big corporate success stories are one thing. What does all this mean for regular, everyday people? Well, this number, over 15 million, that's how many parents now get their kids' education stipends sent directly to their mobile wallets. No middlemen, no waiting in line, no delays. Just instant, direct support. This is where the revolution gets real. And the impact just keeps spreading out. Millions of people can now get money sent from family abroad right to their phones. There's this massive network of over 220,000 agents, which means that even the most remote villages have access. From the corner store to government payments, digital finance is fundamentally changing lives for the better. But hey, no revolution is without its challenges, right? While the success in basic payments has been undeniable, the next stage of innovation, well, it's starting to hit some pretty real-world hurdles. So here's the other side of the coin. The system has been fantastic for payments, but it's really struggling to evolve beyond that. We're seeing limited innovation in other areas, like digital loans or insurance. A lot of transactions are still over the counter, where people just go to an agent to deposit or withdraw cash. New business models are hitting regulatory walls, and that's stopping the whole system from offering a wider range of financial services. So, what's actually causing these problems? Let's break it down. Sometimes the regulators just don't have the technical depth to oversee some of this complicated new tech. Getting different government agencies to work together causes major delays. The approval process itself can take over a year. And then there's just good old-fashioned bureaucracy that can slow the whole sandbox down to a crawl. And the consequence of all that is pretty clear and, frankly, a little stark. The very engine of innovation that the Sandbox was designed to fire up is now at risk of stalling out. The system that was built for safety and stability is now creating friction that's slowing down progress.
So, where does Bangladesh go from here? Well, this whole experience has led to some critical lessons, and those are now shaping a new strategy for the future, a path toward what they're calling smart finance.
The journey so far has taught them some really important things. First off, it's all about finding that balance, that sweet spot between innovation and protecting people. It's also become obvious that regulators need to become tech experts themselves, and that a one-size-fits-all rulebook just doesn't work. And finally, you can't do it alone. Working with other countries is absolutely critical. And this success hasn't gone unnoticed. As the Visa Economic Empowerment Institute put it, Bangladesh has managed to strike a delicate balance between openness to innovation and risk management. So even with the hurdles, the world is recognizing that they know how to walk this tightrope. The foundation is incredibly strong.
And these lessons are now fueling a much, much bigger ambition, the Smart Bangladesh vision for the year 2041. It's a future that's built on 4 pillars, and you can see that Fintech is the engine for all of them. It's going to power a smart economy, enable a smart government, and give smart citizens the tools they need to build a truly smart society. And all of this leaves us with a question that's way bigger than just Bangladesh. In an age of crazy fast disruption, how does any nation balance the sheer speed of innovation with the stability that its people and its economy absolutely depend on? There are no easy answers. But Bangladesh's journey shows us that maybe the most important innovation isn't the technology itself. It's having the courage to build the sandbox where it can safely be born.